Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. Sign up for a 1-week free trial, no credit card required, for access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Having a look-see at Twitter GPRO X and CHK daily weekly time frame. So the Twitter bulls made a very strong bull break initially, and it was a clear break at 1807. That was the level to break. It was the high of the day initially for a brief period of time, and that was when it was a double top. So we knew if we broke 1807, there's the momentum for the bulls. It really went better than we could have expected, and saw a move of 50 cents to the upside after that. So that was a huge gain to be had on that break, and that resistance level comes from the highest price that we had seen in the 4 days. So in the videos, we've been saying that the bulls have been buying the dip and doing a good job of establishing support, but they needed the momentum to the upside to get it going, and as soon as we broke 1807, that really happened with high volume. But a lot of profit taking, big upper wick. This is a bearish candlestick. I do believe that the bulls still have a good shot of holding these supports, because they've done such a good job recently, and it's not like we closed near the low of the day. But this is a setback in the sense that that profit taking was definitely notable in terms of it being a lower high, where we had our upper wick of profit taking here June 26th, lower high now. So we have to be very cautious watching these moving averages. They need to hold for the bulls in the short term. Inside bar on the weekly time frame is likely to stay intact until next week, so we'll be watching that range as well, and we can see the range tightening up as the daily chart tightens as well. So watching very close how tomorrow responds. That's going to be very telling. If we see a red day and a move down into the low $17 range, the mid $17 range, that would obviously show us that the bears do have a lot of momentum still. But I do think the bulls will be able to hold this support level again. Have to see what the market does as well. GoPro on the daily time frame, also very big upper wick of profit taking, setting just another lower high, rejecting from middle Bollinger Band resistance. Support is 795 and 791, and then we're looking down at 775, so there's a lot of room to the downside from where we currently stand. And look at the upper wicks. Every time the bulls bounce and try and turn things around, it's just upper wicks of profit taking, because the bears have control of the trend, whereas we're coming off the all-time lows. So still nowhere near that middle Bollinger Band on the weekly, not testing it this week. And that will continue to be a major factor as it ever so slightly shifts to the downside, because we are leveling out over the past couple of months compared to what we used to be doing. So it's not really a steep decline, but it is going to go down every week. X on the weekly time frame, or the daily to start, is still weak, and I still am not trusting these bulls. So support is down at 2173 and then down at 2147. Upper wick of profit taking. And we are still holding the daily middle Bollinger Band. The bulls have that in their favor, but I can't get over this weekly. Still not liking the inability to push through, not liking how long it has taken the bulls to get to this point. So watching that resistance of 2308, and as long as that is weekly resistance, I'm going to be hesitant to trust these bulls on this move. So we do have the bullish MACD cross crossing in. We do have a potential bullish TCG cross close by. So bulls could kick it up a notch, maybe if they have a really strong end of the week. And we need 4%. That's unlikely. But we got to be watching this weekly resistance. CHK, follow through to the downside, close at the low of the day, volume and momentum favoring the bears. This is exactly what we were looking for. We were looking for the oil lower high to indicate a potential bearish entry in CHK. Just so happened that natural gas started pulling back significantly at the same time oil did. Really nice timing for the energy sector bears, or the bears on names that are very dependent on the energy sector, like CHK. So lower highs and lower lows have been prevalent. Now we've got a lower high being set again, and a lot of bearish reaction to that. So we're looking down at support of 465, 455, and then 446. So watching to see just how much more weakness we see from here as the weekly time frame continues to reject from exponential resistance, and we will see the volume's not going to be telling because of the holiday week. But the bulls have not put two strong weeks together in a couple of months, and as long as exponential weekly resistances, as long as they stand, they will keep the bears in control longer term. So that's what we've got heading into the end of the week, and we'll check back in over the weekend. Thanks for tuning in.